Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Gabriel, great to have you on the show.
My pleasure, Brian. Thanks for having me.
Now, Gabriel, overnight tech stocks tumbled with Apple and Amazon tumbling 4% and 2% respectively. Now, this is despite most of the tech stocks, in fact, reporting stellar earnings and beating analyst expectations. So you look at Apple's earnings per share came in at about 73 cents versus about the consensus of about 70 cents. Amazon's earnings came in at $12.37. Now that's up from the $7.41 that was generally expected. Now, Gabriel, what's your view on this?
Well, not surprisingly, and Brian, simply because if we look at Apple's earning and if we look at the total revenue rather for the latest quarter, it came in at 64 billion. So if we do a breakdown, I think the investors' focus is on the key growth markets, and in this case, it's not coming from North America, it's not coming from Europe, but it's actually China. But if you look at Apple's contributions in China, it's actually down 29%. So Apple's in the post-conference call, Tim Cook has mentioned that the reason why it was actually down is because last quarter they actually had the Apple launch. That is actually the Apple iPhone launch. This quarter they don't have it, but you and I know, essentially they have already launched Apple 12. So essentially they think Apple 12 will do pretty well because in China because of the 5G connectivity. So that's point number one for Apple. If we move on to Amazon, it's the same thing. Spectacular results. I mean, on the top line, revenue came in at 59 billion. That's for North American market. For the international market, it grew spectacularly as well. Revenue is 25 billion. But the key thing, and that's one thing that's intriguing investors, is that going ahead, that means for the fourth quarter, they are guiding at a revenue of 112 to 121 billion. That's perfectly fine. But look at the bottom line guidance for operating profit, which they registered at 6.04 billion in the last bid in the last night. Essentially, they're guiding for a lower operating number in the region of 4.5 billion. Now that is actually lower than the current consensus focus of 5.4 billion. Now for technology stocks, be it actually the FANGs, non-FANGs, as well as the up-and-coming SaaS kind of stocks, that means software as a platform, as a service kind of stocks. I mean, for investors, the key thing is always to look forward. And one of the key things to look forward to is actually the earnings expectations for the next quarter, the next 3 years, as well as the next 5 years.
Now, using that example of next 3 years, let's zoom in on long-term prospects of one stock moving forward. Now, what's your long-term view on Apple moving forward?
Well, I essentially like Apple, but you have to understand that with respect to tech stocks, Brian, the key thing is that have stocks actually run up too fast, too quick. So for example, if you look at Apple on the 2nd of August 2018, it actually was the first company to surpass 1 trillion in terms of market value. And then in August this year, to be exact, I think it was 19th of August 2020. That's like 1.5 months ago. It exceeded $2 trillion. So when it actually exceeded its 2 trillion, Apple actually smashed the share price then at 467. Henceforth, Apple have done a 4-for-1 split, which means that theoretically at $500, the share price divided by 4 would now be trading at 125. So Apple now has pulled back to below 110. So in view of the fact that its results and its guidance on China, if you believe, or as investors actually believe that the prospects of China will recover in this current quarter, going ahead as guided by the company, then maybe if Apple pull back to below $100, that means coming close to the 19th of August price in which it smashed through the 2 trillion level, then that may be a bargain kind of region for investors to be looking at. So it's important to bear in mind earnings expectation versus valuations, and also looking at basically your risk margin, as in basically you will always want to have a good buffer. You don't want to be buying when the price is actually surging. You want to be buying when the price is retracing.
Now, Gabriel, there's an alternate school of thought that says that basically Apple is on the cusp of its next growth cycle. Now, there are three key trends that underline this belief. Now, one is, of course, this whole COVID crisis and the whole greater demand for work from home and devices and so forth. Now, Apple, being a quality provider, is obviously going to benefit from this trend. The second thing is, of course, we're about to start a big upgrade cycle on devices. 5G is going to be the catalyst globally for that upgrade of whether it's your iPhones, but also all the other devices, because of the first point of greater demand for work from home devices. Now, the third trend then, of course, is also the fact that if you look at one of its parts of its business, which is growing but still very small, it's the wearables business. And so that gives some analysts an optimistic view then perhaps that there's still a lot of run up to go. What do you think?
I totally agree with you on the qualitative trends, Brian. But for investors, I think it's very important to be able to price in these three trends that you're talking about, be it actually Apple or any other technology stocks. So for example, the very first one that you have mentioned, in terms of basically the upgrade to iPhone 12, yes, I totally agree. With respect to the connectivity, the 5G, that's new and that's phenomenal. I mean, 5G versus 4G is a huge leap from, say, 4G as compared to 2.5G. So in that respect, the Apple iPhones, as well as the Mac, as well as actually its other accessories, are actually primed to actually be on the first of the market to catch it. Particularly so in the most advanced country right now, which is China, in terms of 5G connectivity and ability to connect. So they are actually playing against the likes of your Huawei, your Oppo, as well as your Xiaomi. So in this regard, I think it's left to be seen whether in terms of pricing of the iPhone, especially, they have actually looked at the iPhone 12, that's the SE model, being much cheaper than, or at least close to the China's comparables. So in that regard, they may be able to gather the market share that they have lost out in the previous models. That's the iPhone 11 and 10. With respect to the second trend, which is basically the wearables, yes, I think the advancement of the iPhone, the iWatch essentially has incorporated a lot of the features pertaining to what you can do on a smartphone. So, well, to a large extent, that whether you actually have a wearable that's the iWatch, in place of the iPhone, for example, that's livable right now. The only thing is that it's left to be seen whether it's going to cannibalize, therefore, the iPhone market with the wearables.
Okay, that's an interesting perspective. You look at it from a cannibalization perspective. Now, going from one hot stock to the hottest tech stock right now, the Ant Financial IPO. Now, there's a reported this morning an 800 times oversubscription in Shanghai, with bids totaling 2.8 trillion US dollars. Now, Gabriel, is there any room for IPO first day pop, especially given the fact that its IPO valuation is so rich?
You're right, Brian. I mean, the IPO valuation, when we first talk about it for our investment students in our investment classes, well, as you know, we conduct technology stocks classes, on a monthly basis and we cater to 8,000 students, basically in Korea, Japan, and the rest of Asia. So in our last class, for example, we've mentioned that the market cap of Ant when it was first mooted for IPO was actually as low as 50 billion. That's like 2 years ago. Right, and this year alone, they have seen valuation gone up from 150 to 200, then from 200 to 225, and then you have it to 250 to 280 and 313. That's the final number, So it's a humongous valuation up, But at the same time, if we look at basically what we presented in investment classes, we also note that the profit have actually doubled from 8 billion to 21 billion in the last reported first half number. So if you actually look at Ant and actually you analyze the profit, you will actually get is 6.4 billion in terms of US dollar for this particular year. So the key thing really is that at 313 billion, so N is being priced at 36 times price earnings ratio. But this is assuming no growth for 2021. In the prospectus that N has actually given, they are guiding for a growth of 2019 to 2022 at 40% CAGR. So if you believe in the number of prime, that means that the PE in which it's coming out at IPO based on 313 billion US is at 31 times. Now at 31 times, if you compare to the likes of, now if you understand Ant and its ecosystem, people understand it as basically Alipay and Alibank, previously, but actually the main growth, Alipay actually started and propelled Ant to what it is today. But what is driving its growth now is actually the InsurTech and the credit tech. That is growing at 39% as compared to Alipay, which is growing at 36%. Now, if you think there's tremendous potential in the three sub-markets, that's basically InvestTech, credit tech, and InsurTech, then this is the IPO to go for. So we have prime our students to basically be looking at this IPO, participating in the IPO. So we are happy to see that it will pop on the first day, but if it doesn't get the kind of immense pop that we are hoping for, we still think that the growth CAGR going forward, it's going to be tremendous. The other thing is that because of the immense liquidity, as well as actually the huge enormity of its market cap, that's at 313 billion, it has surpassed JP Morgan, Citibank combined together. Now it has even surpassed MasterCard as well as Visa, and it's comparable to PayPal. So PayPal PE right now is actually at 36 times PE. So if you think Ant has room to grow, at least it should be able to match and emerge as the industry behemoth, then it should be priced at closer towards the 36%, 36 times PE, that benchmark that we're looking for. Anyway, for more of this on Ant, as well as a detailed prognosis, your viewers can join us in our next investment class on the 28th of this particular month, or rather 28th of November.
So a little plug there for your investment class. But on a final question, Gabriel, what are the tech stocks, China tech stocks, do you have your eye on right now?
Oh, obviously, the main beneficiary for N is actually Alibaba. So Alibaba, be it traded as BABA in NASDAQ or 9988 in Hong Kong, is a key beneficiary. Also in our investment classes that we have highlighted the likes of Tencent. That's the stock code is 0700.HK. This company has rocketed up 20% in the last 2 months since we recommended it to our investment students. So we are obviously very happy, and we are obviously good call. The other stock that actually the esports.
I think there's a challenge with your internet connection. Yeah.
And some of recommendations. Okay, right. So
yeah, we sort of just lost you there for about 20 seconds. I mean, could you just repeat what you just said over the last 20 seconds?
Okay. We did mention that we are elated that because in our investment classes we recommended Tencent, which is the other China stock. The stock code is 0700.HK. So in the last 2 months alone, Tencent has rocketed up from 502, the price, to 609 as we speak today. So this was one of the stocks that we recommended in our investment classes. For more of investment classes, do look at GCP Global website. And you can see that essentially it's powered by the tremendous potential of growth going forward for this particular quarter.
Hey, thanks for coming in, Gabriel. We appreciate your insights. We've been speaking to Gabriel Yap, Executive Chairman of GCP Global on BizTech Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.in